Hi everyone. So today we're going to talk a little bit about how to get exposure to DeFi and some of the newer asset management opportunities that are popping up. For those of you who don't know me, my name is Mona Elisa. I'm founder of the first decentralized asset management protocol. We were founded in 2016. We've been engineering in DeFi ever since. More recently, since we decentralized the protocol in February 2019, we built Avantgarde Finance, which is a core contributor to the Enzyme protocol, but also building an asset management business on top of the protocol. For those of you who are not familiar with the DeFi asset management stack, it's based on the settlement layer of Ethereum. Ethereum is where the transactions settle. On top of that, we had the asset layer, where all the assets, tokenized assets, ERC20 tokens, NFTs, etc., are the assets people trade on chain. And then more recently, in the last couple of years, we've seen the DeFi layer emerge. This is basically everything from trading to lending, borrowing, etc. And in DeFi, we also like to emphasize the custody. We like to educate people on the non-custodial aspects as well. Enzyme handles the operational risk administration, administrative risk management, and operational layer. Today we're going to talk to you about a little bit on the investment opportunities in DeFi, and I'm going to focus on two in particular. One of them is about earning yield on ETH. If you are long ETH and not earning yield on ETH, you're missing out, I have to tell you. And we need to talk. You're leaving potentially up to 10% yield on the table for someone else to take. And there are ways that we can enhance that in DeFi. So one example that we like to look at, many of you will know what staking is. Lots of different ways to stake on Ethereum. We will typically look at pooled staking because it's more liquid, it's on-chain, and it's also more composable with the rest of DeFi. So what we would typically do if we were looking after ETH, one example is you can exchange ETH for staked ETH on a protocol called Lido, and that immediately enhances your yield to 5.4%. But then what's interesting is that beyond that, you can leverage the composability of DeFi to enhance that even further. So you can leverage a protocol called Curve, for example, where you are providing liquidity so that you can supply liquidity to people who want to trade ETH against staked ETH, and that automatically enhances your yield by an additional nearly 3%. This is made possible because you're being incentivized by both the Curve token and the Lido token to enhance those yields, and then you're getting close to 9% yield. If you want to further enhance that, you can deposit into something called the Convex protocol, and Convex is basically paying you for the right to have leverage the governance of your LP token in Curve, and they'll pay you an additional % or so. This is just a very simple example of how we can get to closer to 10% yield on ETH, which you would typically just be holding in custody. There are many other permutations, many other ways to achieve that yield profile. But this is kind of one of the exciting things about the composability of DeFi and all the different building blocks. Another example of yield you can earn in DeFi is a quantitative way. We've been looking at quant much more recently. There's a natural effect because of the transparency of blockchain technology that you can see all the transactions under the hood, and you can imagine that that gives you a lot of data. There are a lot of data providers who collect that data, catalog those transactions, and index that data to make them queryable. And what we've been doing is using that data to kind of identify smart wallets and track those smart wallets. The kind of things that we would look for are things like change of the smart money USD balance in a particular wallet against a different specific token. We'd also look at things like change in the number of smart money addresses holding a particular token. We would also be interested in things like change in percentage holding of one token versus another, or the percentage of stable coins in a portfolio, which might indicate market sentiment. And this week, for example, I'm sure you would have seen a big rise in stablecoins in wallets. We clean all of that data. That data is all clean for inflows and outflows on layer 1, layer 2 bridges, so you get like quite a lot of information. And from all of that data and more, we've built a proprietary model to backtest that data and see what kind of results it would have given us. And what's interesting is that if you would have applied that data since invested in this strategy since January 2020, you would have outperformed the market substantially in USD terms, something like 18x in USD terms and 60x at the peak of that blue line. And what's also interesting is that the strategy consistently performed in ETH terms throughout the entirety of that period. So these are some of the examples we're looking at. There's also other interesting angles in DeFi like indexes where you can enhance the yield with composability. You can also get stable coin yield, although that's a little bit less in flavor right now because of increasing interest rates in TradFi, so it's harder to compete there. But we're looking at a lot of the opportunities. We're actively researching them, and we'd love to talk to you about that research if anyone is interested. Last but not least, it's just worth noting that for anyone who is in TradFi and interested in learning more about DeFi, we've just published our Q3 report, which talks about harnessing the power of DeFi in asset management. You can scan the code to download the report, and feel free to reach out to us if you have any questions or want to learn more about the topic. We're more than happy to help.
Fast.
Yeah, sorry.
That was very fast. Big round of applause from Mona. I'm really interested to kind of get your take, because I know how knowledgeable you are of traditional markets, counterparty risk, and also you've been operating in crypto at a very high level for many years. What do you think has gone on in the last 48 hours with regards to FTX and Binance, and what's your view on it, and how do you navigate something like this from your own personal perspective, but also on the business aspect?
What do I think has gone on? I wish I could tell you. I mean, I've seen a lot of rumors flying around Twitter.
What's the best rumor you've seen?
I don't want to speculate, but there's a million and one different theories and a lot of unfactually based opinions out there. So it's very hard to say with certainty what happened and how it happened. But I think that. If I may, jump back into the DeFi thing, that's one of the beauties of DeFi. With DeFi, you don't have to guess, you don't have to question. Everything is completely transparent, it's on-chain, and it exposes bad actors much quicker than something opaque that you have in traditional finance, centralized finance. So I think, how do we think about it in our business? We're building for a more transparent future, we're building for a simpler future, and we're building for a future that exposes bad actors much quicker than traditional finance. And regulators have good intentions, regulations have good intentions, but ultimately they're only as good as the information they have, and they don't have information. Yeah. So we're.
You break up a very good point, and it's something that we'd spoke about previous today. When you look at what's happened in the last 48 hours, but also when we look back at the whole Terra, Luna, Celsius, 3 hours capital debacle, and the volatility in the markets that we saw back then. Actually, DeFi did exactly what DeFi should have done, as opposed to the smart contract. DeFi, Maker, Compound, Aves, they all did exactly what they should have done. And anything pertaining to the smart contract that should have got liquidated was, anything that wasn't. So it's amazing to see these difficult times in somewhat CeFi issues being occurring, whether that be down to human error, our lack of understanding, our poor oversight. And we won't know, and I think that's a fair reply. We won't know until we have more details. But when you look at what happened with traditional DeFi, it operated exactly like it should have. So we've almost kind of battle tested it in some ways.
Absolutely, yeah. I mean, that is. I mean, DeFi will get paid back in the liquidation before anyone else, and it's a lot more robust and a lot more secure when it comes to things like this.
Yeah. Were you surprised just how quickly things have happened in the last 48 hours?
Absolutely. I mean, you and I have been in finance for a long time, not just crypto, blockchain. But I think this might be the fastest collapse that has ever hit a financial industry in history. So I'm surprised at just how quickly everything happened.
Like, we were around when the likes of Bear Stearns and Lehman Brothers went under, and it really felt like, looking back at that and certainly looking at the charts of Bear Stearns and Lehman's, like it was almost like a slow, death of 1,000 cuts, you know? It was almost like watching something in slow motion. It didn't feel slow back then, but can you compare it to crypto now? It's just instantaneously happening. And I suppose the thing with crypto is that everything is almost early stages, right? Projects, still trying to find product market fit or a theoretical idea, but everything has a 24/7 ticker tape with it. So it's almost like an early stage company which has already gone public.
Yeah.
And that the price drives by emotion and fear, and I think we've seen a lot of fear in the market.
Yeah, absolutely. And there's a lot more politics at stake, I think.
Politics?
And definitely, crypto Twitter fuels a lot of speculation, doesn't it? And that can...
It does. It does.
I don't remember a lot of Twitter stuff when Lehman was happening, but I think that...
No, it's funny, I suppose. We go towards crypto Twitter as a source of information, whether it be right or wrong. It's an opinion-based, but it can be very informative. But no, you're absolutely right. I think I was probably looking at CNBC or reading the FT. Mona, it's been great talking to you, and I'm really familiar with what you're doing at Enzyme. One of the smartest girls I know in the space. It's great to see you present like you did. So a big round of applause for Mona from Enzyme, please. Thank you very much.